Consumers at last are finally saying no. They are pushing back on high prices. They are demanding bargains. They are mad as hell and not going to take these inflated prices anymore. This rebellion is how inflation is finally wrenched out of the system, and I bet it keeps playing out behind the scenes as long as the Fed takes its time cutting rates to ensure that prices start returning to more reasonable levels, like the levels we saw before COVID, before the supply chain mess, and some say the price gouging began. The actions of a fed-up consumer is the hidden riptide that's playing havoc with the returns of many different companies right now, to the point where we're beginning to see some actual disappointments all over the place. It impacts the averages, too. Even on a seemingly sedate day, Dow dipped 57 points, S&P declined 0.16%, NASDAQ inched down 0.06%. The thing is, to even notice the pushback from the consumer, you need to piece together a ton of different data points. You have to create a mosaic by hand. Can't ChatGPT this one, because companies are reluctant to say, hey, look, we took too much price and now we're rolling it back. Sure, some you can spot with the naked eye. Last night, for example, I told you American Express had a terrific quarter. They did. Company handily beating targets, making a ton of money. But underneath, oh my, as the consumer pulled back. The sequential declines in your spending growth with the airlines, they were going at +9. Now they're only +5. Lodging, +5 down to +3. Those are staggering declines. Those are the signposts of rebellion that's coloring earnings so far. Many argue spend is slowing because we've gotten over the post-COVID revenge travel. You know what? I thought that, too. So far, the airlines blame their woes on having too many empty seats. Sure, but they could have filled those seats if they wanted to. All they had to do was slice price. However, they've been reluctant to do so after tasting that magic elixir of high pricing from extremely full planes. They must have loved that phrase every time they boarded their own planes, don't you think? Don't hear it much anymore. We know that people have clearly caught up on their post-COVID travel plans. I work for Comcast. Comcast Michael Cavanaugh talked about it on a conference call, saying about his theme parks, and I'm going to quote here, we're down in both revenue and EBITDA when compared to last year's record performance, with two-thirds of the decline driven by lower attendance at our theme parks, end quote. Cavanaugh mentioned the culprit, calling it a COVID recovery pull forward of a magnitude we hadn't previously anticipated, hence the record theme park numbers in 2022 and 2023. But now Cavanaugh goes on to say, quote, other travel options, including cruises and international tourism, given the strength of the dollar, have experienced their own surge in demand, which caused visitation rates at our parks to normalize, end quote. I bet that Disney gives you a similar decline in park attendance. One reason that stock's falling apart, down 30 points from where it was trading when Nelson Peltz lost his proxy challenge and sold all his stock. Disney's got 5 cruise ships. I wish they had twice that many, because cruises are doing great. Maybe they could have offset whatever theme park decline we may or may not have.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.